Welcome, Benzinga Nation. We had such great interviews already this morning. We want to continue that momentum because if there's anything that you know about us, is that we love to talk executives from publicly traded companies so we can get your questions answered. So we'd love for you to be active in the chat because AI and precious metals, those are two things I didn't really think could kind of intersect, but that's exactly what we're going to talk about rather today with Isaac Dietrich, who is the CFO of Greenwave Technology Solutions. Ticker on the NASDAQ is GWAV. All access starts right now. Isaac, good morning. Thank you so much for joining us.
Thank you very much for having me.
As I kind of mentioned on the show, I read your news earlier today about AI and, precious metals as well, which we'll get to, I promise. But before we dive into all that, let me take a step back. And if you could tell us just a little bit about what is it that your company does, please.
Sure. So Greenwave is one of the largest independent operators of scrap metal chains on the East Coast. We operate 13 metal recycling facilities in Virginia, North Carolina, and Ohio. And at these facilities, we collect and process steel, aluminum, brass, copper from hundreds of different individuals, businesses, municipalities on a daily basis. We operate on a hub and spoke model. So basically our 13 feeder yards then we aggregate all of that metal at our processing hubs where we operate an industrial shredder, an American pulverizer 60 by 85. We have a second shredder in the process of coming online too. And that produces mill-ready shred that we're then able to sell to some of the largest steel mills and recycling companies in the world.
And is that why you say scrap is the new precious metal? And if not, why do you say that?
Well, BlackRock just named green steel one of their top investment themes of the next decade because the cost and environmental impact of producing these raw materials, from scratch, has gotten so high that it makes a lot of economic sense and is far more environmentally friendly to use scrap and reprocess. Steel, unlike plastic, it doesn't degrade each time you recycle it.
Yeah.
So it can be melted down and then recast as many times as you want without losing that integrity. So it's one of the reasons why there's such an increased interest in scrap metal recycling today. And one of the reasons why we see demand for our products increasing.
Well, let's talk about the news that I kind of teased earlier. This morning, you announced that Greenwave Scrap app launched AI features to scale and grow into new markets. Talk to me a little bit more about what this means for the company, but also the overall market itself.
Sure. So we launched Scrap app last September in beta, basically to collect end-of-life vehicles to purchase them from individuals directly. Prior, we had gone through brokers or through other companies to buy these scrap cars, but we figured it made a lot of sense and made a lot of economic sense for us to go direct to the consumer so they can get more money. We buy cars at a cheaper cost because there's no middleman. And it's done phenomenally well. We've generated hundreds of thousands of dollars in revenue just in the limited markets with a very limited budget in which we've been available. So basically we sat down and, we want to do a national rollout. So we want to do that primarily by automating the processes and procedures so we don't have to hire a bunch of staff and increase overhead. And AI makes a lot of sense. It's able to solve a lot of problems that previously you would have to hire and increase overhead in order to do. So we've been automating the marketing processes, writing the blogs, communications with customers. And what we're most excited about is an AI pricing engine that's still in development. We still have some work to do on it. But basically, it'll be able to quote cars in real time to optimize our margins.
Yeah, while you were talking about what the app does and what it helps with, in my head, I traded in a vehicle maybe about, 6 months ago, if that. And now I'm like, man, if I didn't give it to CarMax, I wonder how much I could have gotten from you. But so, I mean, that's kind of the play with that. And I love the direct to consumer because it does help with margins and it helps the individual on the other side to get the best bang for their bucks as well. Let's go to the metals aspect if we can, more so in the terms of what kind of metals do you process, right? And what are the fluctuations in pricing? Because we trade, so we see the prices fluctuate. How does that impact your bottom line?
So we de-risk price movements in the commodities markets as much as possible. We don't sit on inventory. So when we buy copper, aluminum, brass, steel from customers, we actually sell it within 48 hours in most cases of us purchasing it. Whenever there's a material decline in the prices that we're paid, we immediately adjust the prices we pay our suppliers. So that way, this is not a play on commodities. We've de-risked and kind of insulated ourselves as much as possible from movements in the commodity space. That being said, it does impact our top line, obviously, because whenever there's a decrease in steel or copper, our revenue comes down. But we're able to mitigate the impact further down the P&L. So this is not a commodities play. Our two top metals are copper and steel. Steel is obviously our biggest, but that's why we're most excited about this second shredder coming online.
Yeah.
Currently, we're having to sell about half of our unshredded supply, or supply of steel unshredded. So by shredding it, we're going to be able to generate anywhere from 25 to 33% more revenue on that steel supply, with a significant percentage of that flowing to the bottom line.
Now, your company, while doing research, you mentioned the inflection point, right?
Mhm.
Let's talk about the growth and the expansion plans if you believe you're at an inflection point.
Sure. So Greenwave actually got started back in 2004 through Empire, with just one scrapyard. And over the past 20 years, it's been able to expand to 13 scrapyards with a shredder. And basically, we maxed out the capacity of that shredder. So about a year and a half ago, we started installing our second American Pulverizer 60 by 85 shredder, which is in the process of being hooked up to power now. It'll be online shortly. But that will then give us the capacity to expand our yards from 13 today up towards 20, which in turn will take our revenues hopefully north of $50 million, and bring us to EBITDA positive, cash flow positive. So the inflection point is driven by the second shredder coming online,
Yeah.
and also Scrap App. It's scaling quite nicely. And what we like about technology is that we're able to scale into new markets without opening a new office or buying new equipment or significantly expanding our overhead. We can just flip a switch and essentially bring a new market online, so long as we have, a good partner lined up to purchase the vehicles in that market. So
Yeah.
those are the two key drivers of our growth over the next year.
And of course, you mentioned a couple of things that kind of help you increasing your profit margins. It's not by purchasing equipment or spending money on something that you don't need necessarily to go ahead and continue the profitability. But how else are you looking to stay lean to make sure that your profit margins go ahead and increase as well?
So one of the things we're most excited about is we installed a downstream recovery system at our Kelford facility. And basically, what it does is it's able to recover all the millimeter minus metals from shred residue. So, for instance, when you shred a car, you get all that mill ready shred that we then sell to the steel mills. But you also get this pile of what is called in the auto industry as fluff or automotive residue, which up until 5, 10 years ago, people were just throwing away because it looks like trash. But it turns out there's a tremendous amount of millimeter minus metals
Yeah.
in that shred residue. So by running it through a downstream processing system, we're able to extract that through eddy currents, through vibrating bins, through a whole bunch of really cool technologies. And those metals actually aggregate into more than $10,000 of revenue every day, that was previously, just being sent to a landfill. So that's one of the key ways that we're increasing margins today. We actually have a copper extraction unit that we're currently installing, which will be able to take those revenues and take those margins higher. So that's one of the cool things. I think Elon often says, technology is one of the closest things to magic we have,
Yeah.
and it really is true. So we fully embrace technology, we fully embrace automation, and we feel that's how we're going to be able to take the company to the next level.
Yeah, I think AI is a wonderful thing in terms of technology that you can really kind of really take things to the next level. Now, with you being a CFO, and I know our viewers want to kind of ask about this as well, so I'll kind of brand it into a question of, can you tell us a little bit about the financial health of the company as well, especially because I know you had news that came out with the restructuring of aspects of things. this is what the viewers would like to know. So I'd love to get your insights on it because they're listening.
Sure. So we did do a warrant exchange and a restructuring of our debt last week that fully capitalized the company going into the second shredder coming online. We wanted to make sure that the company had the resources to properly train the staff, to make sure that everything will be able to run at full capacity. We do expect the second shredder will bring the company to EBITDA positive, to cash flow positive. So the company is in a much more stable financial state today as a result of that warrant exchange and debt restructuring.
Yeah, I mean, sometimes, you talked about Elon and his sayings, and I'm sure we've all heard the sayings of you got to spend money to make money. And that's sometimes just the investment that you have to make in the company itself. But Isaac, we've talked about so many different aspects in terms of AI, metal, and also the restructuring of things. Anything else that you want to talk to our viewers about, man? The floor is all yours.
Sure. So Scrap App right now is available in just 3 markets. We purchased hundreds of cars, generated hundreds of thousands of dollars in revenue. With these AI components, we feel we're going to be able to scale this to multiple new markets across the country over the coming months. That has the potential to really drive revenues north of $50 million, and it's high margin, great revenue.
Yeah.
I mean, there are so many scrap cars in this country. Like I'm
Yeah.
constantly amazed. Every time there's an accident, every time, even just regular wear and tear on vehicles. So we feel that that's a very significant opportunity that has the potential to create real value for our shareholders.
I appreciate the insight on that. Thank you so much, man. It's really cool what y'all are doing to integrate AI in the sector and in the field that you are. And I think the direct to consumer to go ahead and purchase their scrap metals through the cars that are no longer active is definitely an important place to keep an eye on. Thank you so much for your time today, Isaac.
Awesome. Thank you for having me.
Absolutely. That is Isaac Dietrich, who is the CFO of Greenwave Technology Solutions. Ticker on the NASDAQ is GWAV. And thank you for watching All Access.